The Federal Reserve is good at one thing: keeping their actions a big secret. Some of their data gets released and we can piece it together. Interest rates have been persistently low for a long period of time. Even with their most recent hikes, they are still well below previous cycles. Or are they? You came here for the truth, so let me unveil that for you. Today we're going to look at the Federal Reserve. Something I haven't seen covered in the media, so I wanted to bring it to you. Let's begin. This is the Dallas Fed President Kaplan, and he made some comments I thought were quite interesting. Evidence of building imbalances. So he has a long speech here, but essentially what we can see is right here, a few points that I'll cover. The US stock market cap now stands at approximately 135% of GDP. That's the highest since 99-2000. And we know the type of numbers we were seeing in those days. It's not a good sign. You look at the stock market volatility, the VIX, historically low right now. We've gone 12 months without a 3% correction in the US markets. This is extraordinarily unusual. And he goes on. I won't cover it all. But you're looking at things that are anomalies, and those anomalies keep piling up. It's not one or two, it's more like 10 or 20 or 50 different anomalies that you have to scratch your head and wonder, how can this possibly be sustained any longer? So that's Kaplan. That's what he's saying. If you read it for yourself, you can judge it how you want. I'm just showing you what he's saying. Then we look at this. The shadow federal funds rate. And this is something that is never discussed, and I think it's important. Essentially, we saw interest rates bottom out and stay flatlined for a long period of time. In fact, from 2009 to 2015, the rate was approximately 0%. So that was a long time for it to be so low. However, when you look at this through the shadow federal funds rate, you get a much more realistic picture. And it shows you where this was actually at. And you can see here it goes down to about 3%, negative 3% that is. And that tells me the real truth. Behind the scenes, they're working to conceal the real rates. And the shadow federal funds rate, which, by the way, this is right on the Fed Atlanta's website. You can see it for yourself. These are the real rates that they were at. And so I want to look into this a little further here. On the left-hand side, the Fed may be further along in a rate hike cycle than commonly perceived. This is the Atlanta Fed shadow Fed funds rate. Number one, looking at the area I was previously covering, you'll see that it dipped below 0%. And it has risen since then until today 4.25%. In the previous cycle, 4.25%. 3.5, 4.0. We are already priced in at these levels. And this is showing us the Fed doesn't have much ammunition left in terms of interest rates. It can't do anything except go down. But you have to figure, we were already so low, and today we're so low. How much lower can it go? It didn't really do any good to raise interest rates at this time because they're scared to increase them any further to a real rate. But if they've already brought rates up to 4.25% above where it was at the bottom, those are not looking good in terms of how much more they can go. So I think this is really something to think about. And if you want to look this up for yourself, just go to a search engine, type in shadow Fed funds rate, and you will get some additional information based on that. Quickly here, this is not a normal rate hike cycle. The Fed is hiking later and when growth is slower. And of course, we've been covering this now. Look at this chart on the left-hand side. You're seeing years since the last recession, 8.5. Previously, 3.4, 3.0. The fifth hike here, December 17, they're showing you the average GDP growth, non-existent. As far as I'm concerned, that's not a real number. And it goes on, okay? Earnings per share growth, suggesting that it's much lower than previous times. All I know is that in the previous booms and busts, we saw more natural market forces. We saw a time when there was sustained growth for long periods of time and interest rates were rising throughout those periods. We didn't have quantitative easing. We didn't have a lot of the stimulus that exists today, still today. And so the market was able to restore itself. Today, however, we have complete intervention, and there's no telling how much further they can go. All right. QE has pushed significant flows into US credit. Reverse QE could do the opposite. I mean, that's pretty obvious here. You're looking at everything basically moving in an upward direction, and they completely correspond to the stock prices, okay? And you'll notice that should the Fed start to pull back on their balance sheet and no other central banks come in and make up for it, guess where the stock market will go? Many people have suggested that if that's a fact, they simply will not increase rates and they will keep the QE going, keep the QE flowing. But of course, this is a futile effort. Eventually, you have to give in. And I just wanted to note one thing. I've shown you these charts before, how the QE basically corresponds entirely with the market forces. Now, looking at QE1, QE2, during those QE moments, you would see it rising. And then as soon as it stops, you see it going stagnant or even downward, and then it rises again. And then as soon as it stops, throughout Operation Twist, barely does anything. Then QE3, it starts rising again. And we saw that happen. So we knew that it was corresponding to that. However, in recent times, since QE3 has supposedly finished, we have seen other central banks coming in and buying up the shares. And that's really what's happened. You also have to remember, there's $4.5 trillion on the Fed balance sheet. That's a lot of money. Other central banks, of course, around the same. You're looking at a very big problem on their hands. They can't just let all of that expire. They can't let half of that expire. It's not going to work out in their favor, I assure you. So they have a big problem. I don't know what they're going to do about it, because they're talking about this irrational exuberance. They're talking about the imbalances that are being seen. And yet, they have no solution prepared. They can't restore order without crashing the system. If there's something out there I'm not aware of, I'd really like to know about it. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, there's a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.